Greetings and welcome to the ROI Clear podcast. My name is Ray Hightower, and today we are very fortunate to have as our guest Ms. Grace Wang. Grace is a commercial real estate investor. She has a background in pharmacy. She invests in multifamily and mobile home parks, and she's based in Redmond, Washington. Please join me in welcoming our guest, Grace Wang. Welcome, Grace.
Thank you, Ray. Thank you for having me here today.
Grateful
It's
to
my
have you
pleasure.
here. It's wonderful to see you again. We've spent some time in Arizona looking at properties and discussing some things and exploring some things. So it's good to have you here where we can share some of your expertise with our audience. To kick things off, we're going to ask you for an elevator pitch. And for those who are new to ROI Clear, Grace is on an elevator with someone whom she wants to influence. So we'll ask you, Grace, what would you say to that person in the course of an elevator ride?
Yeah, so I'm a full-time real estate investor and have been investing in real estate for 8+ years. In the last 3 years, I have been transitioned from active investing to more passive investing. And as Ray mentioned before, I do have a background in pharmacy. So I was, prior to real estate, I was a clinical pharmacist at a hospital for over 10 years. The passive income has allowed me to not have to work full-time. I'm a W-2, and the flexibility to be at home with my two children whenever they have a break and be able to take them to after-school extracurriculum activity. That means a lot to me. And I still love the profession. I still love working with my coworkers, but that flexibility means a lot to me. So I recently founded PNW Investment Group. It is a group designed for passive investors that created by passive investor like me. It is a group that we're trying to cultivate a safe and trusted environment for savvy investors that provide support to each other, share knowledges so that we together can navigate the passive investing world.
Yes. So it sounds like you're very much focused on what you're doing with your commercial real estate investing, your multifamily, and your mobile home parks. But at the same time, you still have an interest in pharmacy. Did I hear you correctly that sometimes you still serve as a pharmacist, as a consultant, or tell us a little bit about that, please?
Yeah, so since very young age, I have a passion in healthcare. So my
Mm-hmm.
uncle is an oncologist and very well-known oncologist back in China.
Mm-hmm.
And so that kind of inspired me to go down the healthcare path. I was actually in a medical school for 1 year before I moved to the United States.
Mm-hmm.
And I kind of take a detour to pharmacy. It was multiple circumstances. But once I gone through the rigorous pharmacy program, and I realized that in United States, pharmacy play a bigger role, a lot bigger role than the pharmacists back in China. So we
Mm-hmm.
actually make a big impact on the therapy monitoring along the side with the provider. So that gave
Hmm.
me a lot of fulfillment working the profession. So now, yeah, you're right. I'm still per diem at the hospital, but I
Yes.
basically design my schedule. I just submit the days I want to work and then block off the day that, I want to have time off with my children. And nowadays, I probably just work a couple of days a month at the moment, just to allow me to, be in the moment. It's summertime. I want to be home with my children as they growing up.
Yes. Yes.
Um, but yeah, I still love the profession. I love working with my coworkers and making an impact in different ways. And I keep the per diem position mainly to upkeep, keep up with my skills and also maintain
Mm-hmm.
my social network. So in
Yes.
that, yeah.
Yes. So you're in a very fortunate position, and certainly you worked hard to get there. You developed your pharmaceutical skills. You went to school for pharmacy. You spent a year in medical school in China before you came here to the US. So you've developed a professional skill as a pharmacist. But at the same time, you don't want to work a crazy number of hours per week. You don't want to work 60, 70, 80 hours per week. So now, because you have built your commercial real estate company, built your investment company. Through your investments, you're able to provide for yourself and your family in such a way that you can work as a pharmacist only when you want to on a per
that
diem basis. You do the per
that's true.
diems, and you dictate your schedule. And if they don't like it,
Yeah, it's kind of sum it up pretty well. So, what drives me into real estate is that it's not a very friendly, a family friendly profession. Let's put it that
mm,
way. It's quite demanding as far the hours, especially if you work in a hospital. Sometimes you work
mm-hmm,
days and evenings and weekends and holidays. So after I become a mom of two young children, um,
mm,
your focus kind of shifted. And
yes,
I mean, I still passionate about my passion, but at the same time, my family takes priority now. So,
yes,
and
right,
that's when I started to look for alternative route. Like what other things can provide me passive income so then I can have the option to work or not work as I desire, so that I can focus more of my time on the things that matters more.
right, right. And it's good for you to be in a position to do that. And when you go back and you're interacting with your colleagues, well, I don't want to put words in your mouth, but I'm willing to bet some of your colleagues may invest in some of your deals. Is that a fair statement?
Yes, that's a very fair statement. So, a lot of people are aware of real estate can build wealth.
Mm-hmm.
But some of them either they don't have time or they don't have the desire to be the landlord or they
Yes.
basically don't have the knowledge, right?
Mm-hmm.
So I that's why I feel like there's a big gap that I can help to fill. Because I spend a lot of time in the last 8 years, a lot of trial and errors, figure out a path that
Mm.
works. And everybody take a different path. Don't take me wrong.
Right.
I mean, they don't have
Right.
to follow my path, but learning from what I learned, learning from what my mistakes and learning from what work and what did not work, then I can actually package them together and condense it in a way that people can make it easier to understand, easier to take action. Um,
Yes.
and if I look back, like I wish I know about passive investing a lot faster, a lot sooner,
Mm-hmm.
because
Mm-hmm.
I spent a lot of year like grinding away, trying to make it work for myself. And the first few years when I'm in real estate, instead of gaining back more time for myself and my children, I actually work long hours and spending a lot of
Mm.
time away from my children to get to where I'm at today.
Right.
So yeah, so if I know passive investing sooner, then that picture might have changed. So I would
Yeah,
be
yeah.
probably a little bit better off than what I was today.
We can say that about so many things. All of us, if we look back, wow, why did I do it that way? But certainly there are things you learned there that's helping you now.
Yes, definitely. I mean, it's a journey, right?
Yeah.
And it's about figuring it out and not just know it all from the beginning. And nobody will know it all from the beginning.
Right. Right. Now, there are two main asset classes that you're investing in that I'm aware of anyway. You invest in multifamily and you invest in mobile home parks. Can you tell us a little bit about how you entered those two asset classes? Did you choose one first, or were there certain opportunities that came your way? How did you happen upon those particular asset classes?
Well, initially, cash flow is very important to me.
Mm,
So I look at the number like owning a single family versus a multi-family. Of course, if you can make income from a multiple doors, it's better than just one door, right?
yes.
So that we that's what I know in the beginning. So my first property actually have 4 units.
Mm-hmm.
Um, and then I scale up from there. But quickly I realized that small multifamily is very hard to scale.
Mm-hmm.
As far as in different locations and especially in my market in Seattle, the property value is actually quite high. So if
Yes.
I were going to do it myself and just doing like a small multi twoplex and fourplex, it's going to take me a long time to
Right.
fill to reach a number that I'm comfortable with to live off with, right?
Mm-hmm.
Live off. So that's when I started to invest passively in multifamily syndication.
Mm-hmm.
Um, it's almost like simultaneously. Um, is because especially I'm looking for cash flow. Another asset type that I heard of that produce like a consistent and stable assets. I mean, a cash flow is mobile home park. So I joined like mobile home park camp, and I joined like Kevin Buff program,
Mm-hmm.
um, and Frank and Dave. I did a lot of, I even go out there and build a database of like all the mobile home park owners, and then update the address and do the outreaching and
Yes.
trying to close the mobile home park. So I think those two things, um, those two typical asset types I'm most familiar with and spend the
Mm-hmm.
most time in. And I felt like they're both really, really good as far as providing cash flow as and
Mm-hmm.
equity growth.
Yes.
Yeah.
Both are good in terms of cash flow and equity growth. Do you believe, have you observed that one is better than the other in certain aspects? Like maybe you can compare and contrast the two for us a bit.
Yeah, so the multifamily is most people familiar with, is what the asset
Mm-hmm.
type like the most people heard of and familiar with. Mobile home park is its own niche. So as far
Mm-hmm.
the property management goes, for example, you have a lot of well-known third-party management company that will
Yeah.
manage multifamily for you. But in the
Right.
mobile home park space, it's very different. So there's
Mm-hmm.
not a lot of third-party property management, and for operator that are mom and pop, they mostly manage that by themselves. Like they just
Yeah.
mostly manage the pop by themselves. Or you have a mid-sized operator, they were trying to build an in-house team to do the property management.
Mm-hmm.
But they are in an awkward space because you're not big enough the number is not big enough to support the cost of property management. But
Mm-hmm.
you really don't have other choice, then you have to build it up, and then hopefully you will acquire more unit along the way to justify the property management piece.
Right.
Um, and I think the main difference is in the property management side. Mobile home park, very, very important. You will have to have a person that locally manage it because
Mm-hmm. Mm-hmm.
you do require like a tight oversight on
Yes.
the property management side. Um, but as far as the return goes, mobile home park by far is superior to multifamily.
Wow.
And why do I say this is two things. I mean, I would say three things. One thing is the entry point is a lot lower than multifamily. Like
Mm-hmm.
having multifamily been so hot in the recent years, like we are buying property like in 3.5 cap, right? In a mobile home park, don't take me wrong, cap rate also compress.
Yes.
However, not to a degree that multifamily has been,
Yeah.
right?
Yeah.
And also because we buy in the parking lot rather than a building, so the entry point is lower, right? So
Mm-hmm.
that's one. So when you purchase a property in a lower purchase price, and you gain the revenue, and the expenses also can be lower if you operate efficiently. So then your cash flow, the margin of the cash flow is a lot higher. Like in
Mm-hmm.
multifamily, you'll be happy with a couple $100 per unit
Yeah.
cash flow, right? In a mobile home park, um, it's different metric, but the lot, let's say you buy the lot for 20,000, but you
Mm-hmm.
get a $300 lot payment, for example. That's more than 10%, right?
Mm-hmm.
So that's the difference. So that's number one. The price is lower. The purchase price is lower. And second, it's that it's a lot easier to scale because the per lot is a lower price. So
Right.
let's say a million, you can buy, let's say a 60 lots, right?
Mm-hmm.
Or 30 lot, depending on the location, of course.
Right. Right.
So when you have a 2 or 3, 5 million, you can quickly scale. And that
Mm-hmm.
multiply and then the compounding effects, the scalability
Mm-hmm.
effect, right? And the third thing is the tax benefit. So people like really attracted to the multifamily depreciation. Let me share with you. Mobile home park is another level of the tax benefit.
Really?
Um, yes. So in a general sense, like in a normal environment for multifamily, you cannot depreciate the utility. So like underground utilities, the
Sure.
land value, right? So that's why
Mm-hmm.
you can only take the building portion of it to depreciate over time,
Mm-hmm.
even with the bonus depreciation.
Right.
On the mobile home part, because it's a parking lot, like the individual home is not a real asset. So when you
Mm-hmm.
buy a mobile home park, the majority of the value is in underground utilities.
Really? In the
And
pads and in the electrical and the water, whatever is going to the individual pads.
that's right. The lot itself, because it's a mobile home park rather than a multifamily, the lot value tend to be lower as well. So when you proportion, like let's say you buy a building, a multifamily building for 1 million, very
Yeah.
likely, depending on the location, 40 to 50% of that purchase price get applied to the lot value, right? The
Right.
land, right? That is not depreciable,
Oh,
right? For a
right,
mobile
right.
home park, however, because the lot value is lower because it's a mobile home park sitting on top, right? Not like a
Mm-hmm.
developed, not like a multifamily, not like a mixed use. So the lot
Right.
value is a lot lower. So like a
Mm-hmm.
1 million property, maybe you have like a 10, 20% of that applied to the lot value,
Mm-hmm.
right? So then you get to depreciate at 80% of the purchase price rather than a 50% of the
Sure,
purchase price.
sure.
And within the 80, 90% of purchase price, and 80 to 90% of that is a utility. The
80 to
underground
90% of that is,
like it's an estimate, don't quote me on
oh
it.
yeah, yeah,
So like
okay.
a majority of the percentage of the depreciable assets is for the is applied to the underground utilities rather
Yeah,
than
yes,
the
yes.
building that you have to depreciate a longer period of time. So you get what I'm saying? So
Mm-hmm.
you can buy a mobile home park at a lower price entry point. You can scale quickly. You can with the
Mm-hmm.
same amount of money you can own many more pads than a multifamily.
Mm-hmm.
And also the tax benefit. So all those three things combined, as far the cash flow goes, is superior, a lot superior than a multifamily. And then
Right.
on the growth side, right, because mobile home park has been getting more and more popular right now, and a
Mm-hmm.
lot of people go after them. There are still a lot of opportunity, but also because more people interested, the price going to be uh, bidding up right now, right? So the
Yes.
growth is going to continue to grow. And one thing I forgot to mention is that multifamily, you can still build multifamily. But
Mm-hmm.
mobile home park, because there's a lot of limitation from the city, there's not a lot of permit, not a very easy way to get permit to build mobile
Right.
home park. So
Right.
mobile home park, number of mobile home park actually decrease over the years rather than increase over the year. So now you have
Mm.
one side, the demand, a lot of people demanding it, and
Mm-hmm.
the supply is actually not increasing. Then of course the growth, but the value is going to grow up.
Yes, yeah.
So
The
all those
demand, yeah, yes, yeah.
factors, yeah, so
Okay.
all those factors is drives me to draw a conclusion. Mobile home park is a very, very lucrative real estate asset type.
Right. Right.
Having that being said, because the management piece of it is so critical, and there's not a lot of third-party management you can rely on,
Mm-hmm.
working with an operator that is have in-depth knowledge of property management in the mobile home park space is the key of
Mm-hmm.
passive investing in mobile home park.
How do you find those managers? I mean, clearly you've been at it a while and you've built relationships. For, say, if someone was new to mobile home park investing, how would they go about finding a good property manager to nail that down?
See, you can't just like Google and then call a whole bunch of people like what you would do for
Yes.
multifamily.
Mm-hmm.
You really, really need to get to know the operator. So I tried this, do it myself, right? So to give you some background, after I finished all the boot camp, Kevin Burr actually teach us how to build a database of the mobile home park
Mm-hmm.
owners across the United States. And that's what I did. And I also
Mm-hmm.
hired a VA to do the outreach to reach out to sellers.
Mm-hmm.
And then after I spent thousands of dollars in marketing, we actually get property under contract before, but we didn't end up closing them. And the reason why was the hesitation on the property management side. We are
Mm-hmm.
managing from far away, and we know that need to have a close oversight. Otherwise, the mobile home park can go down the drain pretty easily
Mm-hmm.
because the
Mm-hmm.
tenant base, right? It's a tenant base. Um, Not until I actually reach out. So I joined like a mobile home park owners forum or like a
Mm-hmm.
Facebook group, and then I connected with one of the operators on that group. And then we have been communicating back and forth. Initially I just reached out to him like, hey, I just want to learn about how you operate the part, and I'm still new, like I don't know as the operation part is what made me hesitant to even buy one out of the state, right?
Really?
So
Because you didn't want to operate it remotely? Is that the deal?
yeah, it's the fear. And also because the part is not big. Because think about it, it cash really well, but if you don't buy a big enough a part to justify the travel cost,
Mm.
then you will, if you end up buying the part, you might end up in a place that is like, okay, do I go to see the part and then burn off the cash flow, or I need to actually build a bigger part? I mean,
Mm-hmm.
build my portfolio to a bigger. I mean, it's like a chicken and egg, right? So what
Yeah, yeah,
comes
yeah.
first, right? So, but there's a lot of different part that they are small. Like there's not a lot of big part out there for you to
Yeah,
purchase, unlike
sure.
multifamily. So a
And they're
lot of
not building more. Who is anyone building new parks?
It's really rare. I think there are some people still building it, but it's very
Mm-hmm.
rare. It's a lot
Yeah.
easier to build. I mean, it's all relative term, right? It's not easy to build
Mm-hmm.
multifamily, but absolutely very hard to build a mobile home park. So
Mm-hmm.
let's go back to the property management piece. So
Yeah.
basically, I connect with this operator and we have a communication back and forth for over a year and a half. And finally, he said, like, why don't you fly out here and then meet with us and see what we do on the ground and then see if we can help each other out. So
Mm-hmm.
that's how I connected with a local operator that's very, very generous about sharing knowledge. And we talked back and forth for a year and a half before we do any business together.
Wow.
And since then, we bought three parts together, and they are operating well, because he's local. He knows what he's doing. He have his network there. He's not a
Yes.
big operator though. So he's
Right.
a small operator, but he knows the ins and outs. He's in the weed. He's not like the high level guy like overseeing the operation. He's actually
Yes.
on ground and doing operation.
That's interesting. You were able to form that partnership. Let me ask you this, and I wonder if it's the same in mobile home parks. I invest in multifamily. I haven't invested in parks, but I invest in multifamily. And as you know, in multifamily, there's three main areas where we as GPs focus our time. We're either on acquisitions or asset management or capital raising. Where would you say that you spend most of your time and most of your focus?
I felt like I am an investor first.
Yes.
I dabble into capital raising, good people together invest in a deal. But what my thought process is always, am I willing to invest this deal with my own money?
Okay.
So, and acquisition, due diligence slash operation and capital raise. So, yeah, what you say, like a investment company, that's how they structure it. For
Yes.
me, and that's why PNW Investment Group is actually for passive investors.
Yes.
So, and I like a selfish reason for me to form that group is to benefit myself. So
Yes.
I would like to surround myself with other savvy passive investors and do the due diligence, connecting with operator, like the example that I share with you, how I connected to mobile home park operators.
Right,
They're
right.
not well known. They are small operation, but they
Mm-hmm.
have in-depth knowledge and expertise in the operation itself, right?
You're
And
vetting operators.
mhm, yes,
Okay,
hmm vetting operators, yes.
got it.
So like going back, like it's a transition, right? I was doing a lot of active investing 3 years,
Mm-hmm.
in the first 5 years of 8 years investing, and then the
Yes.
last 3 years I am focused on more like, okay, now I build up a portfolio of real estate that can free me up, supposedly free me up, because now I
Yeah.
have the passive income, but in reality I'm not. I still
Yeah.
tie to the day in and out operation, even though I have a third party management company help me,
Mm-hmm.
but you still have to involve. You have to make decisions. You have to prove
Yeah.
tenants, like you have to prove all the maintenance orders, and you have to manage the contractors and managing the budget and looking over the performance, yada yada
Mm-hmm.
yada. So in theory, with the passive income, I could just sit back and relax. But in reality, is not the case, right?
Yeah.
So that's why I decided, okay, for me to gain back my time, which is my ultimate goal, is to have more time freedom.
Right.
with my children, with my family, and do what matters.
Yeah.
I need to find a more efficient way to do so. So that's when
Right.
I transition to be more passive. So when I dabble into syndication, it's because I'm looking for a way to passively investing.
Got it. Got it. Okay.
So
Looking.
so then I invest with a few deals, and then I was like, oh, this is actually working well because I don't actually need to do anything and money coming in. And because I'm not doing the operation, so I don't need to be in the we and then thinking about all different things. And a lot of things is being chill for me,
Yeah.
right?
Yeah.
Um, that's a pros and cons though, because the pros is I don't need to do anything. I don't need to make decisions. I don't need
Mm-hmm.
to be spend any of my personal time and money just coming in.
Right.
The cons are if you did not end up working with a good operator and you completely out of your control, right?
Yeah. Right.
So
Right.
the second I've noted, I realized that that's when intrigued me into, okay, I need to be understanding what the GP side is doing, like the operator doing, for me to understand that what they are doing behind the curtain, so that I go moving forward, I can understand what things to look for when I'm vetting a sponsor for me
Yes.
to invest passively in the future,
Got it.
right?
Got it.
So that's kind of how I got myself into being a GP, also raising some capital from my investors, and we group together and then we invest together. I mean, there's two main reasons. One is I want to understand being a GP side. And the
Mm-hmm.
second is like, if this is working for me, why don't I want my family and friends and my colleague benefit from it? So
Mm-hmm.
this is like the knowledge sharing. And I don't go out there and then asking strangers like, hey, do you want to invest with me? And hey, you want to da 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 da. It's more like my circle influence. They see what I'm doing and see what is
Yes.
working for me. They reach
Right.
out to me and say, hey, Grace, what you doing? Can you share with me? Can you share
Mm-hmm.
what you're doing? Can we also doing the same thing alongside with you? And that's how
Sure.
this whole thing started.
Okay. Got it.
Yeah.
Wow, we're coming towards the end of our time together, and it goes quick because there's
Yeah.
a lot of knowledge you're sharing with us here. This is rich. As we wrap up, I want to ask you. Um, we talked about what you did in pharmacy and how you connected that to commercial real estate. Are there certain skills that you developed that you grew into as a pharmacist that you use as an investor?
Yeah, I'm very detail oriented.
Yes. Okay.
So I look in like, especially I have been an active investor, have been on a general partnership, and also a passive investor.
Mm-hmm.
Um, I look in at the deal in many different angles, and I try to poke holes on the deal.
Yes. Yes.
And questioning a lot of operation, because operation is where you make the money.
Yeah.
So that skill set is translated from pharmacy into real estate. Like in pharmacy world, a lot of thing is like you have to be make sure the number match up. Like you are have to be very analytical, monitoring the drug therapy and then tweaking the formula and whatnot to make it work, right?
Yeah.
So
Yeah.
that analytical skill and pay attention to details, it translated from from
Right.
pharmacy into real estate, and that really benefited myself and my investors.
Excellent.
Um,
Attention to detail. Yes.
yeah. hmm
Great. And then finally, I want to ask you, what are you reading or what are you listening to? What are you reading or listening to sharpen your own saw and build your skills?
Yeah, so I'm trying to buy back my time right now. So I have been focused on, I'm not reading a lot of real estate book at the moment. So
Yes.
I'm looking like books such as like um Who but Not How.
Oh, yes, yes,
That I trying to read it over and over again. It's not the first time I'm reading it. It's that I
yes.
want to ingrain the ideas in myself that, I don't have to do everything myself. And that's something that kind of tied me down in the beginning. I was like, I need to
Yes.
find a property myself. I have to finance the property myself. I have to renovate the property myself. I
Mm-hmm.
have to manage it myself, and I have to manage the tenant and yada yada yada. So
Yeah.
at the end of the day, yes, that way work because
Mm-hmm.
that got me where I'm at today.
Right,
But
right.
but truly to scale in a degree that I want to and aim for is that
Mm-hmm.
if I can just remove myself from the business and the money still coming in, I
Yes.
got to have some process. I got to have people to help me in the journey.
Right.
And that's the reason why I want to form a group with like-minded people that we are not going to pitch anybody anything. We
Mm-hmm.
are collective mind as a
Right.
passive investor that we can vet sponsors together, we can bring deal together just to, I don't know everything, right? Some other
Mm-hmm.
investor might know certain operator that I don't even know of, and we can
Right.
conduct due diligence together. So it's sort of like, what kind of community, what kind of people that I want to involve in my life that can help
Right.
certain area of things that I don't need to do it myself
Yes.
to scale. So, like to your question, I don't read. So, this is my habit. I don't read a lot of books. I pick one or two and then read it over and over again until I actually take
Mm.
action and implement it. Because
Wow.
I find
Okay.
myself before, I say, okay, I'm going to read 12 books this year. Every month, I'm going to read a book. And then by the end of the 12 months, I look back. I forgot what is the first book it's about,
Yeah,
right?
yeah. Yes.
And I ask myself, have I actually implemented any of the ideas from the book?
Mm-hmm.
And I'm honest with myself that I haven't. I
Mm-hmm.
basically just consume the material rather than
Yeah.
actually implement. So
Right.
now I'm reading the book, Who But Not How, and I think a lot of people know about that book, and it's not new. But
Right.
I've been disciplined. I'm rereading it over and over again, and in like basically ingrain the idea in my head.
Yes.
Um, that kind of like not natural for me because I'm
Mm-hmm.
a very hard worker.
Mm-hmm.
That is in my blood.
Yes. Yes.
So anything that I got a hold of, okay, I'm gonna do it. But then I'm like,
Yeah.
wait a minute. Is this my natural talent? Is it the best
Right.
use of my time? Or
Mm-hmm.
should I need to leverage other people's time that actually energy, I mean expertise and the time. And the same thing
Mm-hmm.
goes with the passive investing. Basically, we're
Yeah.
leveraging the sponsors' skill, time,
Yes.
and
Yeah.
network to do so, to do investing.
Yeah. The sponsor is the Who
That's right.
from the
That's right.
book. Yes. We'll
Yes.
make sure that we include links to a link to Who Not How in the show notes. So thanks for sharing that. Grace Wang, it has been a pleasure speaking with you here at ROI Clear. This is remarkable. I always enjoy listening to you, and I'm grateful that you were with us here today.
Yeah. And one last thing, Ray.
Yes.
For people that are interested in mobile home park investing, please go to my website, pnwinvestmentgroup.com, and
Yes.
download an ebook. So it's a newly published ebook. The title is Unlocking the Secrets of Mobile Home Park Passive Investing.
Yes.
Go to pnwinvestmentgroup.com. If Ray, you can include that in the show note to make it easier for people. And it's right on top. You go to your website, you can see the download button that you can click into it and you can download copy. And I do wanted to bring to people's awareness, and it's not like a rocket science.
Yes.
And passive investing definitely easier in a mobile home park space, but
Right.
knowing who and to work with is very, very the key.
Yes. Know your operator, know your syndicator.
That's right.
Okay. We'll make sure we include that in the show notes too. Thank you, Grace.
Thank you, Ray, for having me. It has been fun.
Excellent.